All right, let's dive right into this explainer. Today, we are decoding a massive and honestly, a highly misunderstood financial trap. We're talking about the collision between maintaining a permanent immigration status and your global tax liabilities. And just to be clear, this isn't about generic travel tips. We're doing a deep dive analysis into the cause and effect reality of international tax compliance. So let's get started.
You know, human intuition tells us that if you pack up your life, move across the globe, and literally stop walking on a country's soil, you shouldn't owe them a portion of your livelihood anymore, right? Well, intuition is completely wrong here. According to expert analysis, there is a severe, almost shocking disconnect between your physical geography and your jurisdictional reality. Basically, moving thousands of miles away does absolutely nothing to automatically grant you legal immunity from the tax system you left behind.
So here's our roadmap for today. We'll hit the worldwide taxation principle, define legal residency, expose the myth of abandonment, navigate double taxation, look at treaty tiebreaker rules, and wrap up with global asset reporting mandates. Let's jump in.
Part 1. The worldwide taxation principle. The main takeaway here? Geography is irrelevant. We really need to establish a core premise right out of the gate. Tax residency is a strict statutory classification. It operates completely independently of your immigration status or, where you happen to wake up in the morning. Having the legal right to live somewhere and being legally bound to pay taxes on everything you earn globally, yeah, those are not synonymous concepts. The real friction here is that you can easily have one without the other, or worse, find yourself trapped by both at the exact same time. It is literally a blanket claim on your global economic output.
Moving to Section 2, defining legal tax residency. Specifically, we're going to look at the two primary triggers that snap this net shut. Okay, so governments basically use two distinct traps to catch you in their tax net. The first is the substantial presence test. This one is purely mathematical. If you spend a certain number of days inside their borders over a specific time frame, boom, you trigger tax residency. But the second trap, the permanent resident test, that one is way more insidious. The exact second you are granted permanent immigration status, a legal anchor drops. It's an instant status-based mechanism that stays active worldwide. Even if you literally never spend another single day inside that country's borders, that status alone subjects your entire global income to their tax system.
Which leads us perfectly into Section 3, the myth of abandonment, or as experts often call it, the continuity trap. According to a really insightful expert briefing, your tax residency continues indefinitely until your permanent resident status is officially and administratively revoked. Look, so many people operate under this incredibly dangerous assumption that just letting things expire breaks the tie. But living abroad for years, letting that ID card expire in your wallet, or, literally cutting it up with scissors, that does absolutely nothing to sever your legal obligations. The physical card is just a piece of plastic. Your permanent resident status is a permanent legal reality recorded in a government database. You simply cannot just walk away. To actually escape this continuity trap, you have to execute a very strict sequential administrative gauntlet. First, you have to voluntarily surrender the document itself. Then, you file specific, official renunciation forms. And crucially, this is the hardest part, you must receive administrative confirmation that your status is actually terminated. That third step is the ultimate administrative burden of proof. Until you hold that final official confirmation in your hand, the government still views you as a resident, and that tax tether, it remains entirely unbroken.
All right, Section 4, navigating double taxation and the mitigation strategies you can use.
So, what on earth happens while you're still legally tethered? Well, if your origin country taxes your global income and your new host country taxes your local income, you run face first into this baseline reality. The default reporting requirement never vanishes. You still have to report all your global income on a standard resident tax return. Now sure,
Strategic exclusions and credits do exist, so you aren't completely crushed by paying taxes twice on the exact same dollar. But here's the catch. The paperwork burden, what experts refer to as the compliance tax, is permanent. You have to meticulously report everything every single year just to prove you qualify for that relief. Section 5. Treaty Tiebreaker Rules. Think of this as the ultimate escape valve. When you've got two different countries legally claiming you as a tax resident, international treaties kick in with a specific hierarchy to find your true center of life. And guys, authorities go way beyond just checking where you sleep. This is a highly invasive analysis. They heavily scrutinize the location of your permanent home, the center of your vital business interests, where your family actually is, your habitual abode, and your nationality. They use all these factors to force a decision, pinpointing a single residence for treaty purposes so you aren't just endlessly caught in a jurisdictional tug-of-war. But right here is where the hidden danger lies. There is a massive and often totally non-obvious trade-off between your tax strategy and your immigration status. Let's say you invoke a tax treaty and legally declare yourself a non-resident to shield your global income. Well, the immigration consequence for doing that is severe. By doing so, you are practically handing the immigration authority the exact piece of evidence they need to revoke your permanent residency entirely. You're essentially weaponizing your own tax return against your immigration status. It is a closed-loop trap that a lot of people don't see until it's way too late.
Finally, we're at Section 6, Global Asset Reporting Mandates and the Strict Compliance Reality. $10,000. That's it. That surprisingly low threshold is literally all it takes to trigger mandatory and heavily penalized foreign asset disclosure reports. And the biggest trap here? It's an aggregate total. So say you have 3 different foreign bank accounts and each only has $4,000 in it. Well, you just instantly cross the line. You are then legally mandated to report every single account in granular detail straight to financial crime units. Thinking you can hide behind international borders? That's practically a statistical impossibility today. Now here's a really fascinating, non-obvious detail from the expert analysis regarding how the system actually tracks your wealth. Physical currency or even precious metals kept in a personal safe abroad, those are generally exempt from these specific institutional reporting forms. Basically, the system struggles to track what isn't digitized. But the very second that wealth enters the institutional banking system, whether we're talking savings accounts, shares, mutual funds, whatever, it becomes strictly tracked and highly scrutinized. Because, let's be real, authorities are not just crossing their fingers and relying on your honesty here. Global tracking is enforced through aggressive institutional coercion. Thanks to international treaties, foreign banks are legally strong-armed into identifying and reporting their permanent resident account holders. If a foreign bank decides to play games and refuses to comply, they face absolutely devastating 30% withholding penalties on their own institutional transactions. Because of that massive financial threat over their heads, they will absolutely hand over your data to protect themselves. In this modern system, you are entirely visible. So as we wrap up this explainer, you really have to stop and ask yourself, are you confusing geographic distance with jurisdictional immunity? Because in the high-stakes realm of global compliance, relying on implicit assumptions carries devastating, lifelong consequences. A piece of plastic expiring doesn't free you, and moving thousands of miles away certainly doesn't hide you. Deeply understanding the actual mechanics of these laws, that is your only true protection. Thanks for joining me for this analysis, and as always, keep learning.